Good morning, good afternoon, good evening, everyone. Before we go ahead and jump into it, just kind of same as usual, I'd like to do a quick little sound check. If you can hear me all right, could you please type a Y into the chat? Beautiful. All right, so for those of you that don't know, my name is Shane with Trade ATS. So what we're going to be doing today is just kind of taking a look at some pairs and going over some examples. There's also rate decision that came out yesterday. So we're going to be looking at a few examples of kind of what happened with that and some of its effect and some of the trading opportunities that were generated as a result of that news coming out. So anyways, all of that being said, a little bit of housekeeping. For any technical support issues, please keep those over to support@tradeats.com and always send a screenshot over if you if you can. It really speeds up the process of getting stuff figured out. But anyways, all of that said, I'm going to go ahead and hand it over to Wade, who is going to walk us through the rest of the webinar. Take it away, Wade.
All right, thank you, Shane. I want to welcome everyone to the webinar today. Appreciate you guys getting on. I know some of you guys are up late, some of you guys are up early, and some of you guys are in the middle of the day. So we definitely appreciate the efforts you guys make to get on the webinars here. So what we want to go through, we got a bunch of stuff in the works that's definitely we're working and trying to get multiple projects done at the moment. But I had a few things I wanted to address with you guys. Just kind of let me see. I'm going over my list here. So what we're going to do too, I'm going to go through. I think everyone's been getting some good value from going over different currency pairs and doing kind of the top-down analysis from the higher time frames to the lower time frames. So we're going to keep doing that. I got a few different pairs picked out. And also too, I will mention, if you guys have any basic questions, this is a basic training webinar, especially because we get a lot of new people that have recently signed on with us that have just more basic questions and things like that. So we're also going to try to answer those questions. If you want, even while I'm talking, you guys could go ahead and type in those questions if you do have any, and be happy to address those. Sometimes we can't get to everybody, so I apologize if I do miss your question. You could always send it into support@tradeats.com and we'll get to you that way. Anyway, we'll try to get to as much as possible. So I'll have the currency pairs I'm going to go over, and then I'm also want to talk about I mentioned on the webinar, I think it was last week, we were talking about coming out with what's called, I guess we're calling it the volatility report. And what this is, it's going to be kind of a compiled list of currency pairs that we think are basically ready to go into the trending phase. They've already gone into the expansion, but we think that they have potential, over the next week, 2 weeks, 3 weeks to actually be good running pairs. So we're putting together this volatility report that we want to send out to the community that will basically just give you guys like, hey, look, keep these on your radar, because it looks like there's some there could be some good trending days. And as you guys know, if you've been trading for any length of time, the easiest money is to be made on the heavily trending days that have one direction that they flow all day long. And those days are actually somewhat predictable, looking at the market from the point of view of the three phases. When we get the expansion out of a box, that is your first signal that volatility is now coming into the market. And one thing that you could do, I'll give you a little insider tip, is that the size of the box, when you guys are looking at ATS software and you get a breakout expansion, let's say on your daily chart, the size of the box, you can measure it top to bottom, will actually, you can expect that you're going to get that minimum amount of movement. So let's say it's 50 or 75 pips top to bottom of a box. Well, the minute you expand, you can expect that you're going to cover at least that range up or down. So there's a proof of volatility that's already in that market. So anyway, just a little tip, you guys could check that out. But it gives you expectation. So that's really what the volatility report's going to be. It's going to be about forming an expectation of what's coming up, because what we want to do is we want to keep you guys out of the sideways markets. That's one of the functions of what the boxes do. And we want to keep you guys trading in trending markets. So if you understand when that's going to happen on the higher time frames, for instance, on the daily chart, if you understand that the daily is going into the trending phase, what is that going to mean for your New York, London session trading? You know, when the heavy volume comes in, it means that you're probably going to have nice trending moves, which are going to be the easiest to navigate. And so if you guys can focus your trading heavier on those situations and then scale out or scale back after the markets have already ran a significant move, then you're going to stay more out of the sideways markets, and that's definitely going to help you guys out. So that's the purpose of the volatility report. We're working on that. We'd like to have something done on that. We're trying to have it done probably by next week. And what we're doing with it is we're putting together not only the report, which we would like to put out every Sunday is what we're going to shoot for. That'll have that compiled list with the analysis along with it. But we also want to put together some training videos to go along with how to think about this. And this is something that we're going to do for not only for the subscribers, because you guys can literally you can use ATS Assistant to generate your own volatility report. But this is going to be more for the Forex community in general. We do have a number of people. We have thousands of people that are subscribed to our list, and we want to give them something of value and expose them to our methods that way. And so it's something we're going to make not only for subscribers, but it'll go out to our general list as well. So anyway, we're excited about that, and we think that it'll help out everybody that gets it. So. Anyway, one thing I wanted to talk about too, let me pull my screen up too, so we're not just all staring at a blank screen here. Hang on. Okay, should be up now. So one thing I want to talk about that I was going through the forum, and I don't get to go through the forum as much as I'd like to, but when I do, I try to kind of go through there and answer as much as I can. And I know Shane's in the forum answering things too. So we're trying to get to that. But one thing I saw was a discussion talking about that ATS was repainting. And as you guys know, if you look at our facts section on our website, there's a paragraph in there. It says, does ATS repaint? And it says absolutely not. It does not repaint. So I want to take a few minutes to go over, number one, what repainting is, and number two, because there are some discrepancies between if you have ATS on a screen and then you have someone else that has it on another screen, and someone has a box and you don't, or there's a discrepancy between that, there is a reason for that. So I want to just touch on that. I've touched on it before, but I just want to reiterate what's going on there. So number one, repainting, the definition, because there are a lot of indicators out there that repaint, the definition of repainting means that it's going to paint a line or whatever that indicator does. It's going to give some sort of indication with a line, or maybe it's a buy arrow or a sell arrow or whatever, and you'll have that. It'll be on the screen, and then it will disappear. Let's say if it falls out of criteria for that. So it'll appear, disappear, or it'll change after it's already given an indication. And ATS does not do this. It's not in the code. There is no way for it to draw a line and then take that line back. It's not going to happen. Once a line, a box, or an expansion line, a box, or a liquidity line has been triggered, it's there forever. Now, so I think some people were getting it confused with a situation, because there is a discrepancy between brokers' data streams. And this is something that we can't get around. If you guys are using, let's say, for instance, you're using FX Choice, and then you also have a broker account at like Forex.com or IC Markets or one of the other brokers, and if you compare the two screens, it shouldn't be very different, but you may have, let's say, a box on one chart, might be the same chart, and no box on the other chart. Or you may have an expansion line somewhere and then no expansion line on the other chart, comparing the brokers. Now, the reason for this is that the way that the brokers receive data into MT4, it's specific to that broker. and how they receive that data stream from their liquidity provider. And there are differences, and the way ATS calculates is it's purely calculated off of the data flow into MetaTrader. So if you have a different data flow, or let's say your broker cuts off data at a certain point, let's say in the middle of the day for whatever reason, and then they restart it, that will change the way that ATS draws, because it's looking for the criteria of boxes, of liquidity lines, of expansion lines from that stream of data. So if I have even if it's slightly different, that could be the difference of a box coming up or not. And so what I want you to understand with this is that it's important to follow your screen. Of course, I'm going to show you analysis right here in the office. We use FX Choice demo account just for our teaching and for our webinars and stuff. But so I'll show you on that, and you may say, well, you have a box there, you have it. I'm just telling you, I'm showing you the thought process. But if you're looking at ATS as a chart map, you're looking at it all together, the architecture all together, even if you may be missing a component, or you may have one more component than I do, you may have a box where I don't, it should lead to the same information, because overall we're trying to identify the directional bias on the higher time frame, and then we're trying to find a safe entry into that trend. So there should be enough data altogether if you're looking at not only the box you're working with, or maybe the last few boxes that create that overall market structure. It should lead to the same conclusion. So it's important that you guys follow your screen and what it tells you, even though, like I said, there may be some discrepancies between this platform and another platform. It's something that we can't get around. The only way it would be fixed is if everybody had the exact same broker, the exact same data stream, and like we would have to force you guys all to use the same broker, and then everyone's screen would match identically, and that's just not going to happen. That defeats the whole purpose of using MetaTrader 4, because it allows you guys to use whatever broker you feel comfortable with. And we're not introducing brokers. We don't make money from your spread commissions like everyone else does. They try to peddle strategies and try to push you onto their things because they don't care how you trade. They just want you to trade as frequently and as much as possible so they can get a spread commission. We don't do any of that stuff. Okay, we leave it up to you what broker you want to use and who you feel comfortable with. With that comes these discrepancies in the data. So anyway, focus on what your screen says and use it as an overall map. Like I said, as long as you have you have it running correctly and you're looking at your higher time frame, you should come to the same conclusion overall if you're looking at the map as a whole. You're not looking at one individual thing. You'll still come to the same conclusion, and you'll have enough there. You'll have enough architecture on your chart to find an opportunity and manage it effectively. So anyway, I just wanted to touch on that. At some point we want to go to our own platform, which I'm actually looking into now, where it would all be housed in our own platform. You would log in, and at that point it would be obviously consistent across the board, but we're still a little ways away from that, so anyway, try to look past some of that and try to understand that you're looking at an overall map, and you're trying to we're all going to come to the same conclusion. We should all have the same directional bias on certain currencies. It should all overall work together. So anyway, just want to address that, and hopefully you guys are learning to understand that a little bit better. That being said, I'm going to start going through some currency pairs here, and we got some let's see here, we got some questions coming in. So while I'm talking, if you guys have any questions about specific currency pairs, specific setups, or just about general ATS software questions, go ahead and type them in, because as soon as I'm done here, I'm going to go through the questions and kind of get to those when I'm done here. So anyway, go ahead and type them in and we'll get into it. So the first pair I'm going to take a look at is dollar CAD. I'm going to see what's going on. We're still trending down on the monthly chart here. So right now, it actually looks like we could be getting a pretty decent setup for a short on the month with the daily. If you're going to ride the monthly, you can see we're holding below expansion. We're in a red candle right now, so everything's looking good right there. We expanded upward on the daily right now. So right now, it's not quite ready. I like to see some sort of reaction. You may have started building a short position on this candle because it looked like it was dying out a little bit right there. But if you're looking at the overall structure, if you got the box we're working with right here, and you're looking at this overall as the map, what you'd want to look at right here is that basically your worst case scenario, number one, we want this monthly. If this monthly is gonna pay us, if it's gonna keep trending, then this candle really needs to hold red. And ultimately, is this wick right here, if this extends up, we want this to hold under this expansion line right here. You know, if it comes up above that expansion, then it's not probably what we thought it'd be. So what I'd be looking to do is, if you're going to trade this opportunity, first of all, understand it's based on the monthly trend. So this could take weeks to come around and pay you. Understand that's a time scale that you're dealing with. And you want to look at these other points of structure in the software. Right here, we have an expansion line up here coming out of a box. So right here, you're basically dealing with this range between this expansion and this expansion right here. As of right now, if you enter, if you get much above this expansion, let's see what that price is. That's 1.32896 roughly. What's the expansion line over here? 1.33204. So let's see here. So basically this expansion level right here on the daily chart is representative roughly of this one too. So that shows you right here, that's kind of your tip point. If you're looking to build a position, you're looking to short this back to here, right here is kind of, you're going to make it or break it, at this level or below. It may come up to this level, may even take out this liquidity line, but let's just put it, if price is up here, you're probably getting a different signal on your monthly and you need to be careful at that point. As of right now, though, you know that your risk is in this general neighborhood. If you start building a position in here, ideally you want to see some sort of reaction, so you can have some sort of confirmation. But you can start building that position right now. Your upside is right from where we are right now to this expansion. Your immediate upside is about 157.3 pips right here. So that's your upside. Your downside to this expansion, 65. Even if you get up through this liquidity line. So right now, your worst case scenario is, you got a little more than a 1-to-1 ratio. But remember, this is just initially, like, it'll get back to this expansion right here as long as the monthly trend holds. It'll get back to here, even if it doesn't ultimately go. That's just to test the trade out. From here to here that's just your initial test. Yeah, it'll put you in the money and you can make money, but ultimately you're looking for the monthly to have some follow through. So if we get from here to here and then we hold below that expansion line, that's where the trade takes off. So here is just from here to here is testing, getting below that expansion and then starting to flow downward. That's that's where it actually goes into a run, and that's where you gotta figure out where you think we're headed to. And that's where you would manage your profit based on this liquidity line, based on this liquidity line, or if it really runs based on this liquidity line down here. So you could see based on the initial risk to reward, this is kind of the sweet spot because you have more than a 1-to-1 ratio just coming back to this expansion. So anyway, it's an interesting setup for a longer term trade. But if you trade like New York, London session and your schedule, your normal schedule is trading those markets, don't switch that up because you see an opportunity here. This is a different, if you're going to trade the daily into the monthly, make sure that's really like all you do, because you want to be able to focus on that. You don't want to be in a trade on a 5-minute chart and then see this and then dump all your account equity, your margin onto a situation like this. You want to really get used to the time frames that you trade on. So if you're trading the daily into the monthly and you're looking just for those slower but bigger opportunities, this would be an interesting situation to deal with. But if you're trading the lower time frame, stick with that. I would ignore this and wait for a similar setup on your lower time frame. So that being said, let me switch this over to a daily. Switch this to an hour. Okay, now our immediate move up on the daily is obviously long. We're above expansion, but it's extended. So let's see what's going on here. Okay, so we had the buy out of the box. Let's see here. Okay, so this is January 22nd. So let's find that over here. Here's January 22nd. There's your run up. Okay, so here's your first coming down in criteria. If you would have bought it on this rotation here, you say we came up, hit the liquidity line here and came back down. This is more of a break-even situation. If you got on maybe even a small loss the way that whipped around, that's fine. It's your first opportunity. Normally, if you bought on this rotation and let's say you take your loss right here, no big deal because it's normally going to give you a better entry. So if you cut the loss right here, you notice it came down all the way down here. And now we have this much more room to come back up to this level. Because remember, as long as this daily stays intact, you're coming back to here. You're going to go through all those previous expansion levels in trend. So right here, come down, your next reaction point, you had a green candle here. So let's say you just buy right there. That built all the way back up to here. And you notice, this was, I'm not going to lie, this was difficult, but as long as you had faith in the daily direction, and also too, actually I want to address this too. This whipping right here, this is part of the deal when we're trading. You have to understand that, sometimes it'll go and sometimes you're going to get more whipsaw action. You're going to get more of that traditional expansion back and forth out of a box, and it just happens. So, in this situation, the structure you're dealing with is you're way up here and the base of this move is down here off this expansion here. So if this did decide to fall apart, it could really come all the way back down to here. So your position sizing, your expectation needs to be consistent with that. You don't want to get in a situation where you buy, and let's just say worst case scenario, this started going against you. You really want to use, if you don't have a clearly, if you're far away from your structural out, on that, you really don't want to go against the whole, the rule of don't risk more than 1% of your account on a given trade. You want to use those basic rules if you're just kind of out in no man's land. Obviously, we feel good about that daily trend. It's showing a lot of momentum out of that box, but you're still far away from your structural out. So, it's something to take into consideration. If you did buy this, it gave us another expansion. Notice we come below expansion. Again, it's giving us another opportunity to buy into that trend. Even though difficult, there's no situation in here, if you're trading the 1 hour into the daily, that you would be selling. So no situation at all. So if anything, you're buying, you may have got stopped out twice. If you're trading heavier, you're trying to protect that position. If you're trading light, you say, I got in right here, going to build one position. Maybe you got stopped out on that one. You put in another small position, put in another one here, build that position in this area, because ultimately, remember, as long as the daily holds intact, you're coming back at least to here. So navigating this was a little difficult, but as long as you stayed on the long side, it should have come around. You should be definitely good to go on that. You notice that we came to this level, it held up. See how we held at that level, and then boom, we had that explosion. So if you did build the position in here, you caught the run up, we got to this level. If you didn't cover here, you came through there, and then you're covering on these liquidity lines. That was the trade. So basically from this range up here, done. Same thing through here, had another one through here, up through here, cover on the liquidity lines, done. Small opportunity. This one down here, had your first reaction right here, buy in this neighborhood, come back up, through expansion right here, liquidity line up here, cover right here. So hopefully you guys see kind of the repeatability of that. No selling. That's the biggest thing I want to drive home. As long as you stay in trend, you don't even have to be that good at finding your entries, because at the end of the day, the momentum of that trend is what's going to be forgiving. Remember that. That's if you take one thing away from working with ATS, from working with us, the trend, for lack of a better analogy, the trend is your friend, right? Like they always say, use a structure, but use it in trend. And that's what's going to come around and take care of you. And
Hey,
these,
Wade, real quick, I just wanted to point out that second to last opportunity, just point out that that one was a little bit tough to take, because it just popped out and started going. It was kind of a breakout from that second to last box. It didn't really breathe back too much.
You're talking about right here.
Yeah, that one would have been tough. If somebody missed that, that would be pretty understandable.
These can be tough because I know it's hard to break out, to trade breakouts. But here's the thing with this is that the more familiar you get with this, when you get a rotation like this is, you could have bought right here and then this would have naturally just built. Remember that ATS gives you story as the market unfolds. So no one could predict the future. We're just working the probabilities of the trend, and we're using the architecture as it builds to make decisions. In this situation, if you did wait through this and you got this breakout, you can trade breakouts because you're still under this expansion. Remember, it's not about this only this one situation right here. We're now comparing this expansion with this whole range. So we know that as long as the daily stays intact, even if you just bought this breakout, even if you were sloppy on it, you bought right here, you're still working back towards this line. So you're still under expansion at that point. So yeah, remember, you want to work it as an overall, this is an overall puzzle, this whole area that you're putting together, but you have a bias to the long side. This is what's making your life easier at this point in this run, right? So anyway, that's that analysis. So let's take a look now. Let's look at the initial day, which looks pretty choppy. Okay, so there's a one hour, and then we'll jump to the 5. Usually the 5. There's another question in the forum talking about time frames and what's the best to trade. Good time frames are 5 into the hour if you want to go a little faster. If you want to go a little slower, the 15 into the 4. You just got to kind of find what suits you best and what you can react to the best, and just stick with it. That's the biggest thing. You want to stick with it. You don't want to be jumping around time frames every day. You want to get used to your time frames, and time frames will have times where they set up visually perfectly, and then other days they don't. You have to just stick with them. You have to roll through because you have a positive expectancy of those time frames. So, you don't want to get caught up chasing around different time frames and different opportunities, because then you're trying to find something and you're not letting the trades come to you. That's an important thing. You want to let them just come to you. Okay, so 5 into the hour right now. Let's take a look. This is pretty choppy market. You can see right here, you definitely want to stay to the long side. So right now, let's see, the 5, there wasn't much today. I'd say today, really, we had this situation go long here. We're above expansion, so you want to kind of stay to those green candles on the hour. Right here, we pulled down, we held expansion right here. Remember, you're working this range. So this was on this run up right here. This was your first opportunity below expansion, and you would have been comparing it to this level right here. So there's your range you're dealing with. That's your overall kind of box of price action. Rolling down to here. Right here came above, so kind of tested you on that one. If you bought here after you saw the reaction at this level, bought here, that would have been difficult because we did get a red candle here. So this was difficult to navigate, but as long as you stayed to the upside, you should have been okay. These red candles, when you get a situation like this that you bought right here, remember you're comparing inside the structure that ATS is giving you. That's a range, and we're not, the way that the candles come up. Remember, you're going to get a candle every hour in this situation regardless, and those colors are going to change on the Heikin-Ashi candles. They are overall, they're the most stable color candle, color-wise candles that you could get, so they're good for keeping you in trend. But in this situation, if you did get caught in a short right here or in a long position right here, and then you saw that red candle, in this situation, this is just a little tip. You don't have to do this, but you can look at the wick on the before candle also, and also even though this is red, you can still be comparing that red candle with the structure that you're working with. So if you bought right here, understand that you're starting to get in the money now on this trade. It's going sideways. This is kind of, you're sitting through some choppy markets here, but you should be sitting in it long. based on being above expansion, based on this previous run up. And you should be, basically, let's just put it this way. If you bought right here, and let's say it didn't work out in that long trend, you'd want to cut it below this low, because now we're starting to disrespect this level, and we're at that point we're headed for a downtrend. So you could look at that, you could look at this candle, you could look at it in relation to this previous low on this previous, and that all is representative of the same levels you're working with here. And that's what takes some finesse and takes some learning over time, because I know a lot of people want to cook it down to, okay, when I get out, it means this. I'm looking for this specific signal. So people will see, okay, it's a red candle, they'll just dump it. You don't necessarily need to do that as long as the structure is still intact that we're working with. You have that previous expansion line. Now even though you're in this choppy range, you're holding above this previous level. That's all a good sign, because you're ultimately still trying to work that trend, even though this candle's red. So yeah, the red is like, it starts to say, okay, maybe I had to be, you got to definitely start being, you got to start looking at the possibility of a down move forming, but understand that until you start disrespecting these lines on, in a down situation, that you can still hang out and turn this into a winner if it's still going to rotate, even though that candle was red for the moment. So anyway, that's what the experience that comes over time that you guys will get. So. Okay, the next one I got is pound Aussie. So let's take a look at that. Okay, I'm gonna try to go through these a little bit quicker. I know I kind of get on rants here, but I'm just trying to give you guys as much as I can. Give you guys as much takeaways as possible here. Okay, monthly's clearly long. It's been long for 1, 2, 3, 4, 5 months now. You can see every single, this is kind of what we're looking for. We got expansion lines stacking one above the other. Every time we're below, you're getting paid on that daily. Same thing right here, boom, held at this previous structure, coming back through, kind of had you sitting sideways here, but didn't go below this level, back through, came through this expansion level right here, had the explosion to the upside. Be looking to cover right now. If you entered on the rotation right here, this would be the ultimate play out of that up move. And yeah, I'd be definitely looking to take profits on that one. So anyway, these are good. These are the markets that we really are, that we wait for. If you're trading the daily into the monthly, this is beautiful right here. No trade right now though, that's for sure. You don't want to enter right now, it's over. Okay, so let's switch this over to the daily. Switch this over to the 1 hour. Okay, no trade right now, but what were the trades here? So last expansion lines right here, momentum's above, got held up at this liquidity, but still stayed green through there. So same principles here. Let's take a look. So obviously this thing has run, and one thing on your directional bias at these levels, you do got to be a little more careful. You see how we're so far into the wick and extended on this. This is a situation where you'd want to be careful. Even if you saw a setup, even though there isn't, I mean, this is, yeah, we're way extended on this. Just came through this liquidity line up here, which is representative of the same one on the daily, looks like. So yeah, nothing going on right here, but this is already come and gone, this whole move. Let's see, I want to see the day that we broke out here. So the day we had confirmed breakout was 22nd. So okay, here's 122 kind of in here. So your first grade A opportunity is probably right in here. Boom. If you caught that one, then that held you in. That's why I look at the grade A opportunities. Those are yes, you're close to the turn, so they do have the potential to come back into the range. But the ones that do hold, you see it held above the previous expansion line right here. That's a strong position in here. That's a really strong position because it's the first to the party. You have a new confirmed trend in momentum. you're above expansion. That'd be your first buy opportunity on the breakout on this candle right here. So that's, if you trade those grade A opportunities and you really stick to those, and especially the ones in trend, that's, as you guys see, that's the power of that position. If you would have held, obviously this is a long while to hold, but if you're trading on this time scale, then you should be used to, being in a trade for, for days, or even weeks, if you're trading the daily and the monthly. So anyway, a lot of good trades. The fact that we got momentum, we're above expansion is a reason why every time you come below, just like a rubber band, expansion's pulling you back. Holds another opportunity here, holds that previous expansion level, right back, gets up through, you see it gets to that expansion, it's trying to break, boom, breaks above, now comes back, turns that into almost a support level right there, and boom, there's your explosion up, cover when the box comes back in. If you don't have a liquidity line to work with and you catch a run, you could cover as soon as you go back into the contraction phase. It's got to put it together with what you have to work with. Same thing right here. We get below. If you entered right here, I don't know how extended this was at the moment, but it was probably pretty extended. One of those situations again, you bought right here, you have this low, just take the loss at this low, because at this point, if you just bought right here, your downside is still down to here at this previous level of expansion. So, you got to position yourself accordingly to that. Same thing right here. If you bought again right here, you're a little closer, but still, right here, if you bought on the turn, your basic upside to expansion's 83.4 pips, your downside about 82. So right here, you're at about a 1-to-1 at this turn right here. It did come down and test you again. So there's a possibility if you were going off this exact low and you had your stop set at this level, you could have got stopped out twice, but your fundamental direction, according to your directional bias, did not change. So again, you want to still keep working that direction at this level. Now we have from here to the expansion is 101.4 pips. From down here is now only 64. So now you can see, we're getting into a better risk to reward ratio as the market comes down. Enter again here. We come back up. We're still working towards this top expansion. Now we're starting to come and we're starting to hold. We're starting to respect new architecture in trend. See that? That's a good sign. Now we break through and shows momentum. That's a good sign. As it's unfolding, we're starting to see momentum build. Still working towards this level right here. Come down, another expansion, holding above here, and then boom, right as we get through that initial expansion, we tested it in here, and then had the ultimate breakout, and that's where the momentum kicked in for the trend again, right at that level. You can see represented right here. So difficult trades to work out, but the point is, even if you have to enter a few times, depending on your position, you could either build a position, if you're going to build it and just say that I'm going to get out down here, you obviously want to start very small. If you're going to trade a heavier position, then you want to control your risk within these ranges at these turns. So that's going to be up to you how you do that. But the overall point is the daily is long, and as long as you stuck in that directional bias and you did not get caught on the short side of the market, you should have been just fine through this entire period. Nothing but long trades, okay? Right now, I'd be looking to not go too crazy on it because you see we're at the high, representative of the liquidity line up here. You can see the reaction here. Most traders are going to watch this, are going to watch all this go by, and then they're going to not be able to take it anymore, and they're going to go long right here because they just can't take it. That's amateur mistake. The money's already been made on this one. If this is one of the pairs you've been tracking, and it's pretty much over at this point. So let's look at the 1 hour chart. Let's see what the moves were today. Okay, starting to get in criteria, but obviously we're getting, when we do these webinars, we're getting out of session. So there's really never anything. So all we could do as far as like opportunities at the moment, could it go? Yeah, possibly. There, we could head up, but we've had a huge run. So you got to think about what's the probabilities of this going. You know, not not probabilities that I would want to take. So we have new structure here. We're starting. I would think we're probably going to get probably at least a few more expansion lines at this level, unless it just totally falls apart and comes back to here. But in this situation, you know, you wouldn't want to trade this until, you know, tomorrow would be the earliest, just to see what you get in here. As far as this actual move, we came into criteria. You have 1 hour above expansion showing momentum to the long side. Down here at the turn is where you want to start getting aggressive, not up here. Now, when you don't have an expansion line to work with, you could look at these previous levels. For instance, we had the breakout here. You're going to miss this. This is going to go by. You're probably not going to get that. As we turned down, came through liquidity. We got a reaction. Come down, you notice that it's holding this previous level. So you can look back. Remember, we're looking at this overall architecture to figure out what's going to happen. You're definitely biased to the long side at this point. Right here would be your first opportunity. Now, this is a momentum entry because you are above your last expansion. If you're going to trade these, if you feel good about the 1 hour, you can get in on these rotations, but make sure you control your risk real tight. In these situations, you're expecting the market to just go. You know, this is it. From here, this one broke heavy. That one probably not a lot of people are going to catch that. The only way you'd be in this is if you were in it from down here safely. So right here, if you bought that, you want to control your risk on those opportunities real tight. Same thing right here, another rotation, control it tight. Again, right here, control it tight. And you're just working the momentum rotations. This is almost like a moving average crossover. You can do that, you can get away with that, but the confidence in those long trades comes from the hour being in momentum. And also remember that the hour is in momentum with the daily as well. So you have a lot of interest in those timeframes backing up this trend. If you look at the multiple timeframe video, we talk about the strength backing up trends, and you have the daily direction in support of this. So that would give you a little more confidence to take these types of opportunities. But anyway, that's if there was an opportunity in it, it would have been on those rotations today. Just like I said, make sure on these you control your risk tight. Okay, so getting a little long-winded here. I think what I'm gonna skip my next one. I'm gonna go what I wanted to check into was Bitcoin. I know a lot of you guys are interested in the Bitcoin market. If you don't know what Bitcoin is, you need to go take a look because it's pretty revolutionary stuff. Okay. So our monthly doesn't take a rocket scientist to figure that out. We're in a box. Okay, so we're going sideways. That's why we've been stuck at this, you know, $8,000 to $9,000 range, because we're just literally finding the middle of this box right now. So on a monthly time scale, I would say that there's not really, you know, if you're going to do anything, I would probably start looking to the long side. But overall, you know, on a monthly time scale, there's not much to happen right here. If you see before here, and this is because we don't have enough data to go back, we had a box down here. So if you were back in, you know, 2015, when we popped out of this box, it's the same thing we do. If you guys, I know it's kind of tight, so it's hard to, I can't scale it any smaller than this. But if you see, we had an expansion level right here. It popped out on the monthly, had 1 month that took a breath, held at this expansion, and right here it was go time. If you were trading that monthly and you wanted to ride it, we broke that. And you had months before warning before this explosion. Now, nobody could have predicted that it was going to go to 20,000. No one could have predicted that, but you could have got in this trade and controlled your risk based on the architecture on the monthly. If you're going long Bitcoin, it was all there. So right now though, nothing. It's ranging out. Every time market goes long, people are just getting crushed coming back. So it's just an overall choppy market. So anyway, that's what we got going on the monthly. Let me take a look at the daily here. Okay, so the daily is initially long right now. Pull this over to the hour. Okay, so the hour, same situation that we're working with, on any other currency or any other trading instrument. Same thing. We're crawling up on the daily. Your first opportunity looks like was, let me see here. So we broke out short, went long on the 27th. Okay, so 127. So this may or may not have been an entry opportunity. I'm going to ignore this one because at this point we're still in this overall structure. So let's forget about this. Let's say you didn't get that. Right here would be your first opportunity. Let's call this the grade A opportunity. Came down, had an expansion on this candle right here, rotation, enter right here, get up through. We're testing from here to here. We got through the expansion, boom, put you in. Realistically, you're probably covering, unless you want to hold it, unless you feel great about the daily, then you'd still be holding your long position. If you're looking for a quick scalp through expansion, we had liquidity lines to cover on, time to cover, snap, done. In here, same thing, you're kind of going back and forth. Entry right here, held below, we're still baking in that, and then boom, came up, had its opportunity right here, fell apart. That's a break-even situation. Had another opportunity, grabbed some liquidity right here, opportunity on this rotation, working back up towards the expansion level right here, playing with it right here. This is a difficult situation because right here we had kind of the whipsaw expansion out of this box. The only way you'd still be in this probably realistically is if you entered right here and you were controlling your risk at this low. This whip down didn't break that low, so you'd still be holding. Overall, no short trades though. Remember, the directional bias is one of the biggest edges, if not the biggest edge in trading, regardless if you're using ATS or not. ATS gives you the architecture, it gives you the sensitive price levels, but it doesn't take a rocket scientist to tell you that you should only be long. So by being long in that daily direction, you have not only been okay through this, but it's, that's the way you've been able to trade safely. So like I said, if I could drill home one thing, it's make sure that you stay in your directional bias. Anyway, that's what's going on. If you caught it again below, these are difficult to catch. These spike downs and spike ups, difficult to catch. So, I'm going to say you're probably not in that. So, really the best opportunity that we've had was this one right here. That was still early to the party. We only got a few days out of the box at that point, and there it is. So that's what's going on there. And then the hour doesn't look like much happened today, but we'll just look at it real quick. Okay, so obviously we're long right now. Fresh out of the box right here earlier, whips back and forth, just playing around with that expansion level. Yeah, not great trading. I think we probably, let me see right here. I think we started to hold right here on this green candle right here on the 1 hour. So there may be a possibility. This is pretty fresh out of that box. So that's why sometimes you get that expansion, that whipping back and forth, and sometimes you don't. Something we don't control. We just have to deal with it. But if you did, you can say we popped down right here, held structure at this point right here. So if you bought right here, your first entry would be, on this rotation. If you wanted to wait for that confirmation, kind of came through, still held above that turning point, got through your expansion level right here, had this, and then boom, big manipulation move down through these liquidity levels. I'm going to call that a break-even situation too, because realistically, you got up through here. I mean, one thing that you guys can do to protect your profits once you get to your initial destination, which would have been if you bought below this expansion, we're trying to work our way back up. You got up on these candles right here. One thing you can do if you want to protect yourself is that you could set your stop right below, because you're basically expecting to hold this level of structure with that expansion, for as long as you can. So, you shouldn't be lackadaisical about these situations. You shouldn't be getting in here and having maybe your initial stop is down here, let's say. That's kind of your worst case scenario. You're cool with that. Your position sizing is in accordance with that. You're not being stupid or reckless. It's working its way back up. You get through right here. You should move your stop up in these situations to right here, because right now that's your new stop level. That piece of architecture that we've crawled through is where you should be protecting yourself. You don't want to let it go through your destination price, see a profit on it, and still get stopped out down at this level. You have the architecture now to work with. That's a difference between setting a trailing stop. Some people say, well, I'm just going to set a 10 pip or a 20 pip trailing stop. You don't want to do that. You want to use the architecture. Those are the real sensitive price levels. It needs to hold that architecture in trend. Those are the clues we're looking for. If it's not going to, then we have new information. And with that new information, we have to form a different opinion. That's what ATS is all about, is giving you information in real time. So anyway, point is you shouldn't have got hammered on this. Now, if you did come down, this obviously pulled this candle red, but notice that by the time it settled out here, by the time you got this candle, we're still above. It's still holding this, even though it's whipping like crazy around it. So realistically, I don't know if you would have caught this. Difficult, but if you were trading, obviously, you'd want to be long. And one thing that you want to do is if you're trading the lower time frames, you want to understand the direction of the day. You want to understand the direction of the day, and you want to understand the direction of the week too. Because if you understand the direction of the week, that predominantly the best moves are going to be in the direction of that weekly color. If you understand the direction of the day, you understand the best short-term moves are going to be in the direction of the daily candle. And again, it just keeps you strictly to one side of the market. That's what puts the probability in your favor in the long term, is understanding that directional bias and sticking with it. So anyway, that's my Bitcoin. Now, my projections, I don't have great projections because, fundamentally, it's based on mass adoption. Until you see Bitcoin accepted at Walmart and Target and Costco, it's going to be a speculator's game. You're going to get pumps, you're going to get dumps, because there's no infrastructure to support holding the price. Until people are having Bitcoin and holding Bitcoin because they need it to buy groceries, and it's not just a speculative investment, that's when the price will start stabilizing. One thing that we look at, if you guys haven't looked at, there's another cryptocurrency called Bitcoin SV. There's a whole backstory around it. If you guys look into the situation with Craig Wright, and he's basically the supposed inventor. He's supposedly Satoshi Nakamoto. There's a whole controversy behind it. If you feel up to looking it up, it's quite the rabbit hole. But anyway, the Bitcoin SV is one thing that we're looking at ATS, is one that I think is more interesting than Bitcoin, because Bitcoin SV does, one thing they are doing is they're trying to restore the original protocol from the original white paper and basically put the scaling potential back into Bitcoin. One problem with Bitcoin is that they've tried to mitigate the scaling problems they've had through SegWit and through the Lightning Network, which is not a proof. It's not a proof of work concept. It's a proof of stake. Sorry, mine's getting a little blurred out here. So the real blockchain technology is based off proof of work, not proof of stake. With proof of stake, there is a possibility that people can come through and control the network if they have, they hold stake in that network over 50%. Anyway, it's not quite as secure. It's definitely hard to crack, but it's not as secure as Bitcoin was intended to be. So anyway, look into Bitcoin SV if you guys think it's pretty interesting reading if you look into it. And it has some pretty huge upside potential, because if they pull off what they're actually trying to pull off, let's just put it this way, BSV can replace BTC the way it is, and you guys have seen what BTC has done. So, and right now BSV, I haven't checked the price today, but I think it's around, is just under 300?
Yeah.
Okay, it's just holding just under 300 right at the moment. Anyway, interesting stuff over there. If it goes, $300 is absolute bargain if that technology holds and it takes some of the market share. So anyway, that's what I got for you guys today. I'm going to go through some comments, Shane. If you have anything you want to add, I'm going to be doing some reading for a few minutes, and
Yeah, actually I do. We just got a comment from Fernando. He said he just got an alert on pound New Zealand dollar on the 15 minutes supported by the 4 hour. So he just got an alert for it. Maybe we could take a look at it. So again, that was pound and New Zealand dollar. Hey, Fernando, could you type in whether it was an A or B signal that you got?
I need to know the time frames too.
15 supported by the 4.
Oh, okay. All right.
Well, I guess we'll see if it was an A or B here in just 1 second.
15. And again, those are the ATS assistant is triggered by the data flow and the architecture that your broker stream is giving. So someone may get a grade A or grade B signal because it's based on our lines, which are based on that data flow. So there, that's obviously it's part of the discrepancy between broker data streams. So we may not have had the exact signal, but it's like I said, it's just the way it goes. But we'll still take a look. So 15 into the daily, and what was the signal?
No, it was 15 into the 4 hour.
Oh, 15 to 4 hours, sorry. All right.
And it was a B signal.
Okay, obviously 4 hours long, above expansion, so that's where the momentum is. It was a buy signal.
He doesn't specifically say, but I'm assuming so.
Well, I'm assuming if it's 4 hour and it was recently, it had to be a buy signal. And the only one I see, we probably had one. Let me see here. The last one that would have triggered, according to the formula, would have been probably at this liquidity level right here. And yeah, I mean that's what it is. If you have the 15-minute set with grade A and B signals, it's looking at the 4 hour direction. They should all be buy signals for sure, because all it looks for. It's a really simple formula.
Oh wait, you still got it on Bitcoin on.
Oh.
Yeah, I know. It's like, man, that doesn't look reflective on the left side.
Okay. Why don't I get the right chart out? Okay. Okay, this makes a little more sense. All right. Sorry, guys. I'm tired. I'm not feeling that great today, so I'm just trying to hang in here. Okay. So obviously, pound NZD is 4 hours going long. So right now, we probably, if we break out short of this box right here, you'd be getting a grade B signal probably, but not knowing where that signal was triggered, the last signal that would have triggered as far as the architecture on this chart would have been the breakout short on this box right here. So that would have been, if you would have got the signal right here on the breakout short on this box, again, that's the thing that you guys got to understand is that when you get the signals, you don't just want to pull the trigger. You want to figure out where you're going, what the architecture, the same analysis I've been doing through this whole thing goes for those signals. This is just alerting you to, hey, we're getting counter trend liquidity, and that's right here at the beginning of this breakout. You still need to look at the overall structure because in this, whoops. Let's see here. Sorry, I got my. Sorry, hold on, guys, real quick. I think I messed up my. Okay, there it is. I accidentally froze my screen on me. Okay, so you want to look at the structure right here. When we're pulling below this expansion, again, where is the base of this move is down here in this architecture right here. So you're working in this range from this expansion to this expansion, and the same situations in a go for entering in those trades. You may have tested it on this rotation. You may have tested it again right here, and you may have tested it again right here, but below you're working with this range and you're only long. But the signal is just alerting you to, hey, we're in criteria. Some of them go right away, especially the ones off liquidity lines. You get a liquidity line grade A or B trigger and you get a rotation immediately and boom, you're off to the races. But you have to, all they're doing is they're telling you, hey, guess what? You're going against the trend now. And it's not only is it just a pullback, but it's timed with the market phases. We're getting an expansion and some counter trend activity against your higher time frame. That's what it's alerting you to. So in this situation, that's what it would have been. And I don't know if you may have gotten a box because it's choppy, depending on how the candles close and things up here. It may have gotten a situation up here where we got a grade B signal. Again, we're late in the session. So if you're getting a signal right now, you'll probably get a signal if we break out short on this box, the way that my screen's set up, the way the data is reading. You'll get a signal when you break out short because the 4 hour is still green. You should get a grade B buy. In that situation, would you take it? No, because number one, we're out of session. So, there's not a good chance of follow through. Number two, we're pretty extended on this 4 hour. So you put those things together, not a great opportunity at this very moment if it has already triggered or you're going to trigger on that short breakout. So anyway, one thing I want to mention about the signals too is that the way that it's programmed right now, it's just looking purely at the candle color. You guys got to understand, you really got to feel good about your higher time frame. So in this situation, you would be getting signals, short signals on if you had the 15 and the 4 hour, as the 15 comes into criteria, even right through here, you had several, 4 hour periods that were on the short side, but you wouldn't want to pay as much attention to those because they're against your expansion. You guys really want to pay more attention to the signals that are in momentum pulling away from expansion. So right here, and right here. So you want to pay more attention to the long side. That'll put more probability in your favor for those signals coming around and paying you. The next update on ATS Assistant will have a filter. It'll have a multi-time frame filter to where you'll actually be able to put it into the 4 hour, and then you'll also have another time frame to back it up. For instance, you'd want to do the 4 hour and then probably the daily as well. So it would be not only looking at the candle color of the 4 hour, but the daily. So you're getting multi-time frame alignment, and then that'll again increase the probability. The reason why it is the way it is now is because I do have traders that have been with me a long time, and they'll take a move, like this 4 hour, because they can manage the risk and they understand the game they're playing. They'll take a situation where it's coming down and they'll trade the short, but they understand the probabilities are not quite there. But every once in a while, they'll catch a major reversal and it makes it worth it. When you're starting out and you're fresh, you want to really just trade the ones that are kind of in line with the basic strategy. You want to really just stick to those. And like I said, the new version will have a filter on it that will give you more, trending alignment, and it'll also have a time filter on it to where you'll be able to have it black out during the if you're trading the shorter time frames, during the the dead periods in the middle of the day or after, between New York and the Asian markets in there. If you don't want to get signals in there because they usually don't turn into much, especially on the major pairs, you'll be able to block it out, and you won't get signals during those times, and it'll all be customizable that way. So anyway, that's definitely in the works. We are still doing some final testing on that, but that should be coming out pretty soon. Anyway, okay, so let me get back to the questions here. We're already at about an hour. I like to keep these around an hour, so I'm going to try to find just a couple of questions in here that I think everyone could benefit from, and then we'll probably wrap it up. So give me a few minutes here. Okay, here's a quick question I could answer quick. Is there any possibility of ATS indicator being converted for use on TradingView platform? I am actually that a good number of people have asked us about that. Ideally we would like to release it for a number of different platforms, including stock platforms. So that's definitely in the works. But you guys have to understand, we're not a huge team. It's just me. It's me, my brother Shane, and we have a few support people, and that's about it. And we are expanding, but there's training processes and things that need to go into place. Every time we every time we launch a new indicator or a new update, or we do anything, we change with our user base, there has to be training and adequate support processes put in place to be able to help people. If we have we release the indicator for a new platform, then we have to be able to help people install that. We spend a lot of support hours just helping people with stuff even though we've made videos and we've made detailed instructions, people still need help. So it's hard for us just to throw stuff out there, even if we can make it quick, because we don't have the support bandwidth to be able to help people effectively. So, and that's our main thing is we want to make sure that, that we are able to, to give you guys the support. So we're not going to release something until we know we're able to support it adequately. But anyway, as far as TradingView, I'm actually involved in a conversation with TradingView at the moment, looking at the possibilities of that platform. And because if we do with TradingView, we were probably going to do our own platform within their, within their structure. Anyway, yeah, there's conversation being had at the moment, and it's definitely, there could be something on the horizon with that. Okay, let me get a few more questions here. Hang on. Okay, another question. Would you set up the monthly, daily, hourly, and 15-minute for entrance? No. I always would look at the monthly, weekly, and daily timeframes to get a sense of the overall macro trend, just to kind of come up with my expectations. But if you're trading a 5-minute or a 15-minute, those trades, you're really not looking to be in the trade unless you catch a massive winner, and it just turns into something that really pops. I mean, those are quick scalps. You're looking to mostly be at cash by the time the New York session's over. So let's just put it this way. If you're looking at the month and the month is green, then you know that the weeks out of that month are predominantly probably going to be to the long side. That's where the significant moves are, or that's where you'd be thinking, they're going to be. So when the markets turn long on the weekly and daily time scale, then you know that, okay, these have the potential to turn into something a little bit grander, just because you're in tune with the monthly direction. Same thing with the daily. If you use a daily and the daily's green, and now your 4-hour or your 1-hour is setting up on the long side, it's above expansion, you may want to hang it out a little bit more on that because it's in line with the daily direction, especially if the daily is now over expansion. You got a lot of stuff working in your favor. A lot of momentum could form, and those could turn into some pretty big winners. So you just want to be, mindful of where that big money is ready to pounce. So
Also, one other little note on if you just glance at some of the bigger time frames, just being aware of where some of the expansion lines are on them, because it's no secret just looking at any chart when it goes into touches an expansion line for the first time or gets near one, the market tends to whip right around that area. So if it is coming up to like a monthly expansion line that it hasn't really been to before, there's a really good chance it's going to whip around a little bit at that level. I noticed it, when we were going through pound Aussie. If you look at that, I think we were coming up to a daily average price line, and sure enough, it just starts whipping around right in there. So just being aware of those as well. You don't need to harp on them, but just making a mental note that, hey, we're coming up to a daily average price line, could get a little whippy through here, and just act accordingly.
Yeah, absolutely, and that's going along with what Shane says. ATS is much about coming up with expectations so we can be prepared, coming up with trading ideas. If your daily is in a box, the good news is you're about to expand. So the minute you break the high or the low of that box, that goes along with that volatility signal. You know that you're going to get movement from that moment. And we're just looking for which side is it going to pick. If it breaks out short, we're already below average price at that point. So you want to be biased to the short side. If it breaks out long, you'll be biased to the long side. Or if it whips around average price, you want to see where it settles if it decides to whip. So you got to kind of work with those in progression. But if your daily has just come into a box, what that means for you if you're trading London, New York session on 15-minute into the 4-hour or 5 into the hour, that means that those days have the potential to be very whippy. So I'm not saying, if you see a good looking smooth setup on your shorter time frames, you could take it, but if it totally just doesn't take off, there's no follow through, then you may want to look at the dailies. Oh, the daily's in a box. Forget this. I'm going to come back when it breaks out and gets a little more, shows a little more volatility, and take those days off. If that's your pair that you're riding through the phases with, it's one of the ones that you're scouting, then then when your higher time frames go into a box, it's time to take a little vacation, in my opinion. You can do whatever you want, but wait till it has the potential to trend. If the daily doesn't have a great potential to trend, leave it alone. Why would as traders, you guys, there's very little we can control. Actually, we can control nothing when it comes to the market unless you're, an interbank trader and you're on that level. As a retail trader, we can't control when it moves, how far it moves, but what we can control is the opportunities that we decide to engage with. So if your time frame doesn't have the potential to trend on your higher time frame and it's not set up right, leave it alone. No one is making you trade that opportunity. No one's making you put your money on the line. Wait till it's good, wait till it makes sense, and then test it out. Get in, use good money management. Don't blow it all on one trade. If you do that, you're going to be way ahead of pretty much everyone else, the other 95% that are trying to make it. So, and these are basic things. I didn't invent these. It's just good common sense. So make sure that you're dealing with markets that make sense, that are showing good action in the price. So anyway, I'm going to try to find one or maybe two more questions here, and then we'll wrap it up. Hang on. Okay, here's a good trade, or a good question. Question is, if I wanted to set my ATS assistant on the daily time frame, what would be the best supporting time frame? On that, I would probably, the weekly is a little bit too close. Although the daily and the weekly can give some pretty good signals, it's still kind of too close. So yeah, but for the long run, if that's part of your strategy, and you're going to stick with it, I'd use the monthly as your supporting time frame for the daily. So just to answer that quickly. Okay, let me look here for a few more questions. Hang on. Okay, going back, I know I kind of opened a can of worms talking about Bitcoin. If you guys were looking for research or to research, it's Bitcoin SV. Satoshi Vision is what it stands for. So Bitcoin SV as in Victor. And you just look on YouTube and you can find there's a lot of hate out there for Craig Wright because honestly, the guy's a little bit pompous. Not gonna lie, but the guy is insanely smart and has about 50 degrees from different colleges. I don't know, not that many, but anyway, the guy, I don't know, it hasn't been proven that he's Satoshi Nakamoto, but supposedly he claims he is. He knows a heck of a lot about Bitcoin going all the way back, and supposedly he's supposed to get granted the keys to move the original Bitcoin from the Satoshi wallet. They're locked in a trust apparently called the Tulip Trust. And if he gets those keys and proves that he's Satoshi Nakamoto, I don't know for sure, but I think you're going to see a mass migration as far as speculators go into Bitcoin SV. And BTC's future is going to be uncertain at that point. So is it going to happen? I don't know, but the upside is pretty significant if you got money laying around. Obviously, don't invest money you can't afford to lose. But anyway, like I said, it's interesting. It's definitely worth the research. It's something that we follow here, and I'll tell you, we did good. I built my first position at $50 when it first came out. It was one of the things I was following, and I'm not going to get into specifics, but we've done pretty well on it. So and the upside is pretty big. So anyway, it's something that we do follow. Obviously, looking at risk management and things like that, but our pricing is so good at this point that it makes sense to just see what it's going to do. for the positions that we hold in that. So, okay, I'm going to take one more question here, and then we're going to wrap it up. Hang on real quick. Okay, here's definitely a good comment. So here in the UK, we have a lot of people that are from UK that are subscribers. A lot of people in UK, a lot of people in South Africa, a lot of people in Australia seem to be. I mean, obviously, I think the majority is here in the United States, but I know a question that has come through is with the whole Brexit thing happening, should we stay out of pound and euro trades? Um, Here's the thing: is that while there could be some dramatic moves and spikes, there also could be those are the kind of things as traders. If you are trading on if you're trading on a long-term time horizon, there you got to be a little more careful because your risk is obviously going to be bigger the higher the time frames you use to manage your trades. But on the daily time frame, there can be some epic daily runs, like epic stuff. For instance, we were trading back. It's been a while now, but with the whole Greece thing, when Greece started to crumble financially, I remember those days. We were trading euro dollar heavy, and there was some epic runs. And so when you get these type of big economic things going on, that's kind of you want to really be. That's where you want to put your skills to the test, and you want to be there, ready to trade those opportunities. So would I sit out of the market? No, if you're trading shorter time frames, there's going to be probably some amazing opportunities as things continue to unfold. So if you're following the euro pairs, yeah, I wouldn't let that discourage you. As far as like news and things like that, I always tell people to stay away from non-farm payroll. Don't trade the open on that. Don't trade the opening on, or trade the rate decision, things like that. Yeah, you want to be careful about those because you typically just get wild snaps. But when it comes down to those big fundamental things, that's really when you want to be around. We kind of wait for that as traders. So anyway, yeah, I wouldn't let that discourage you. So, all right, guys, I want to thank you guys so much for being on. We'll go ahead and wrap it up now. We'll see you guys next Thursday. We'll probably have the webinar. We are going to possibly play with doing it on Tuesday, but we just haven't been able to get that in line on our end yet. So it'll probably be Thursday of next week, and we should have some good announcements for you guys with some new stuff. I'm trying to get the stuff finished up if I can by the weekend, or if not early next week. So anyway, we'll see you guys on, and hopefully we'll have some awesome things to share with you as they become available. So everyone have a good day, night, afternoon, wherever it is for you, and we will catch up with you later. Thank you very much.